What's going on, you guys? Marvin Francois here, back with another episode of Marvin's Room. And today we have my guy, Carter Cofield, where we're going to be talking about how you can live tax-free legally. All right. He's going to give you guys all the games. We're going to be talking about write-offs, entrepreneurships, LLCs, S Corps, everything from top to bottom to put you in the best position to be financially free in 2022. So without further ado, let's get it rocking and rolling. My guy.
I'm happy to be here.
How
First
are
of
you,
all,
brother?
Marvin's Room. The name of the podcast. I'm like, or YouTube channel. I'm like,
Okay.
you can't miss with this.
Yeah. No.
It's too good of a name. Like,
Yeah. I appreciate it. You know, someone gave it to me. Shout out to my guy Brendan Boyd, and I took it and I ran with it.
Ran full speed.
Yeah. I love it. It flows. It goes good.
Yeah.
I appreciate it, man. How are you, man?
I'm doing great, man. You know, just flew into New York last night. You know,
Beautiful.
make sure I could come in for this episode. I'm just excited to give the game, man. Like,
Let's go.
You know, people need to hear what we're about to talk about.
Right.
And, you know, respectfully,
Mhm.
this could be one of the best episodes of your show.
Ooh.
Give you a heads up.
Come on, man. You just set the bar up here.
I'm-
We didn't had some heavy hitters roll in now.
I know. And those heavy hits are my friends. And respectfully to them,
Come on now.
it's over.
Woo.
It's over. Get
Let's
ready
go.
for it.
Let's do it. Let's get right into it. So, before we of course get into all the game, take a second to of course introduce yourself. Tell the people who you are, where you're from, how you got your start, and a little bit about what it is that you do.
For sure. So as you said, my name is Carter Cofield. I'm actually from the south side of Chicago,
Mm.
and many people don't know my story, so I like to at least go into it a little bit. So born in poverty, like, you know, most of we all got our own stories, right? But my mom died when I was 14, and my dad died when I was 16, and then we were homeless living in a hotel with my aunt by 16 and a half years old, right?
Okay.
So for me, I had a choice to make. And
Okay.
I was like, am I going to let these circumstances make me, or let these circumstances break me?
Fact.
And I feel like we all have that point in our life where we can go left or go right. And I just want to give everybody the notice that they can't choose where they want to go, right?
Gotcha.
So I was like, all right, I'm gonna let this make me, not break me. So I put myself through college, undergrad, master's degree in accounting. But before that, I had a mentor. And I think getting a mentor is so important because he gave me one amazing piece of advice. He said, if you want to be wealthy, wealthy people do two things. They make sure that money is working for them,
Facts.
and they keep the IRS out of their pockets, right?
Okay.
He said, if you want to be wealthy, if you learn one of these two insights or strategies, you will never have to worry about money because people will always be willing to pay you.
Gotcha.
Right. So I had this mindset of, like, 17 years old, like, do I want to go to school to be an investment advisor, or do I want to go to school to be an accountant or whatever? So I graduated during the recession.
Wow. Okay.
Right. So I graduated high school during the recession. So I'm looking at the gas prices, I'm looking at my family being unemployed.
Right.
So I'm like, I got to begin with the end in mind here. Right.
Right,
You know
right,
what I'm
right.
saying?
Of
So
course.
I Googled what job has the lowest unemployment rate.
That's a good start.
I'm right.
Yeah.
My back is against the wall. I'm
Right,
like, what
right.
job has the lowest unemployment rate? And CPA was number one.
And for then, it was just a no-brainer for you.
It was
Like,
no brainer. It's all right. It was one of the two. So now this is what I'm going to go to school for, because I never wanted to not have a job. And everybody always needs somebody to help them with their taxes. So I went to school for accounting, got my CPA, worked at one of the best accounting firms in the world, and I quote unquote made it.
Right.
But then, man, it's crazy how God works. So one day I was, I was studying small business taxes and how small business owners can save money, because we were working on a startup company.
Right.
And I started learning all these tax strategies that we're going to talk about today on how
Right.
small business owners save money on taxes. I'm like, man, I should start a consulting firm helping especially Black entrepreneurs, because I know they don't know, right?
Facts.
So I was like, I should do it, but I was making six figures, bro.
Right.
I wasn't trying to leave that job,
Right.
But then one morning, man, and I'll never forget the story. I lived with my cousin at the time, who's been an entrepreneur, tattoo artist all his life. And he came to my room, was like, "Hey, cuz, what's today?" And I'm like, "What?" He's like, "Bro, what's today?" I'm like, "It's Tuesday." Like, imagine I'm getting dressed for work, right? You know what I'm saying? And he's like, "Oh man, I thought it was Saturday." I'm like, "Bro, you a grown man. How don't you know what day of the week it is?"
Right.
He was like, "Well, I guess, I do what I love to do every day, so the days of the week don't really matter to me." How you gonna drop that on me at 8 o'clock in the morning as I'm about to get ready for work?
Now,
right?
that just flipped the switch for you.
Yeah, he flipped the switch, and then he went back to his room, and a week later, I left my job and I started this
Wow.
consulting firm helping entrepreneurs live tax free.
Never looked back since.
No.
And how's life been since
My
then?
life's been amazing.
Oh, I can tell. You blinding the cameras
come
with the
on,
chain.
stop
You
it,
understand?
stop
You
it,
came in
stop
here
it,
with the
stop it.
nice shirt. Listen, That is major, man. Absolutely major. And now you're here, you know what I'm saying, doing what you love, educating the people on something that's pivotal, right? Especially when we talk about financial literacy, which is the understanding of taxes. Me coming from the credit space, I feel like, you know, credit and taxes are kind of just right there in terms of if you're trying to build wealth, you know, when we talk about generational wealth or becoming financially literate, you need to have a great understanding of both these things because they play such a huge role in you getting to that point, right?
Because you teach them how to get the bag,
100%.
which is extremely important.
Right.
I teach them how to keep it.
Hold on.
You know what I'm saying?
This man about to maybe throw these headphones. We didn't even get into the game yet. I love it.
Let's just get started, man.
So let's dive right into it, right? So let's talk a little bit more about the tax code. So for starters, right? Could you explain to the audience the difference between how tax code affects an average person who, let's say, has a career, is working a 9 to 5, right? Versus how tax code may affect someone like yourself or myself who's an entrepreneur?
Man, that's a great question. Great question. So everybody watching, please, you know, take a seat because this is going to hurt.
Oh, no. Listen, get pen and paper out.
Pen and paper out.
It's about to get spicy.
Note takers are money makers.
Let's go.
I need y'all to take notes right now.
Let's go. Let's do it.
So here's the thing I learned. On average, the average W-2 employee pays 51% in taxes. 51%. So think of that. You at home. If you're working a W-2 job, you're paying on average 51% in taxes. Basically, you're going to work for a year and you're working for free for the first 6 months.
That's crazy.
That's crazy.
That's insane.
You working for free for the first 6 months. You know, IRS get their money first.
Right.
So the first 6 months of the year, you giving your money away for free.
Right.
And my thing is like, that's too much, right? That's you know, we could pay a little bit, but that's too much. So once I learned that, I'm like, okay, well, how can people avoid having to pay 51% in taxes?
Right.
And that's when I came up with this. Well, before that, but people need to understand. Is that the tax code is not something to be scared of. You don't.
Okay.
It's not something that you need to, like, you know, pay and look away.
Right.
It's actually an incentive system. I like to call it a game, right?
Okay.
Just like the money is a game, taxes are a game. In order to win any game, you have to be on the right team.
Gotcha.
Right. So what I mean by that is that the tax code was created to benefit entrepreneurs and investors.
Okay.
And people always ask me why. I'm like, well, for entrepreneurs, we create jobs. For every job that we create, the government don't got to create a job.
That's a fact.
For every job that we create, there's one person coming off unemployment.
Facts.
So we're doing them a favor so that since we're creating jobs and stimulating the economy, they're willing to give us breaks. And as far as an investors goes, if you're investing money in real estate or stocks, you're stimulating the economy. For every dollar that you invest is a dollar that the government doesn't have to print. So if you do what they want you to do, they'll give you massive tax breaks. Most people just don't know what to do, right? So, and the second thing I think people need to understand is what I call like the golden tax formula. It's very simple. If you can't do math, bear with me. It's a 3-step formula.
Let's go.
So you had a W-2 job.
Yes, I do. I'm not. We're not gonna talk about it, but we're not gonna talk about it. It's not favorable, but yeah.
Okay, gotcha. So when you was at work, you made money.
Facts.
They snatched taxes out of your paycheck before you can even get it.
Unfortunately.
And you got to spend what's left.
Facts.
Right. But with an entrepreneur, it works a little bit differently. You make money, you spend money, aka reinvest money into your business, and you pay taxes on what's left.
Got you. So it's basically flipped upside down.
Flipped upside down.
Got
right?
you.
So now, you know, again, you make money, you spend money, reinvest money into your business, then you pay taxes on what's left. And if you have a good tax strategist working with you, there won't be much left to pay taxes on. So it puts you in control of how much taxes you actually end up paying.
Got you. That's game changing. And I think it's very important because a lot of people who are watching this, maybe they're thinking about getting into entrepreneurship or maybe they're not. You know, a lot of people have careers and work regular jobs. And some of those same people, they see, you know, guys like Elon Musk or Donald Trump, and they're like, yo, these people aren't paying taxes. You know, they should be paying taxes. Why am I paying all this money in taxes? It's just that they're not hip to the game that's going on, right? They're not putting themselves in position to get a piece of, you know, the piece of the pie themselves. Okay. So now let's dive a little bit more into the entrepreneurial side of things, right? Let me actually take it into my realm because I actually have a bit of a personal question that an entrepreneur who's watching this may favor from, right? So this past first year, this was my first time paying taxes, right?
As a business owner?
As a business owner.
Gotcha.
Yeah.
How was that for you?
Well, it was what it was. We here. We're alive. God is good. But hey, man, them numbers, I ain't like it. But what was funny is at the time, because it was my first time paying taxes, I didn't have a CPA that I was working with, right? So I was kind of going window shopping for CPAs. So, you know, I have fortunately enough for me, I had a bookkeeping software, shouts to Wave. It's basically like QuickBooks, a free version of QuickBooks. I had all my transactions and I was kind of going from CPA to CPA trying to figure out who would be a good fit for me. some of the CPAs that I went to, because I have an LLC, they were like, okay, look, because of your net profit margin, and for those people who don't know, your net profit margin is basically like your gross income minus whatever you spent in the business, and the remainder is your net profit. They was like, yo, you should consider converting your LLC to an S corp, right? And then, but at the same time, there were other CPAs that was like, don't do that, because now you got to worry about the fees. It's a lot more paperwork, a lot more headache that kind of goes into it. So could you talk a little bit, and this is more so for the entrepreneurs, talk a little bit about how the difference in tax code between how it works with LLCs versus S corps?
Got you. So I created what I call my business entity flow chart, because I get this question all the time.
Okay.
Right? And it's really actually simple when there's a time and a place to have each entity. Right? You just got to know what phase you're in to see which type of entity that you should have.
Fact.
So I'll be able to answer this question and give them a little bit deeper insight. So sole proprietor is where everybody should start when they're still conceptualizing their business.
Okay.
You don't know what you're going to sell. You know what your products or services are. You're still thinking about a name. Being a sole proprietor is cool because you don't even know what your business name is. Now, before you start the business, meaning before you actually go sell that first product, before you actually go sell that first service,
right,
you want to upgrade that sole proprietorship to an LLC.
Okay.
Right. So
Gotcha.
File your articles of organization, your EIN, get your business bank account. You're set. Now you can operate your business as you were.
Fact.
Now, an LLC is great for starting out business owners, but there's a net profit line item, but there's a net profit number on when you need to upgrade your LLC to an S corp.
Okay.
And that number is about $50,000 in net income.
Okay.
So once you make $50,000 in net income, you want to upgrade, or you should upgrade your LLC to an S corp, because S corps help you save a lot of money on self-employment taxes.
Okay.
Right. So we pay FICA taxes, we pay state, and we pay federal taxes, we pay state, and we pay FICA. FICA is 15.3% on top of federal and state.
Right.
So that's why we get to that 51% number really quickly. Right.
Right.
So, and so the reason it's $50,000 is because when you have an S corp, your tax costs are going to go up.
Okay.
You have to run payroll, which is going to be, you're going to need payroll software. But at that $50,000 mark, the benefits outweigh the cost. You know what I'm saying? So before that you can, but it's not going to be beneficial. But 50,000 and up, and the more money you make, the more beneficial it becomes, right? If you're making 100K, and you switch from an LLC to an S corp, it's gonna save you $13,000 in taxes. Making that one move.
Wow.
Making that one move.
Got you. See, at the time, I'm not gonna say what my net profit number was, but it wasn't at 50. But a lot of people were like, "Yo, you got to make the move." So initially, I was thinking about it. But another thing that people don't know is, and correct me if I'm wrong with this, when you upgrade when you switch your LLC to an S corp, you can't go back. You understand?
You can't go back.
You can go back.
You can't go back.
Okay, got you.
Yeah,
So you can bring your S corp back to an LLC.
It's called submitting a revoke of S election revoke letter.
Say that again, but say it slow. I want to make sure they're taking all the notes.
Yeah, S election revoke letter. You send that out to your state, just basically saying that you want to dissolve your S corp and want to have your S corp be back and have your LLC, because S corp is just a tax status. Your LLC taxed as an S corp. You know what I'm saying? So when you can revoke your S corp status, if you have a year of business, like I'm not gonna make this amount of money, you can go revoke it.
Got you. So like you said, once you get to that $50,000 mark with net profit, that's when you should strongly consider making that transition to make it into an S corp.
It's not a consideration.
You should do it.
I did the numbers for you. Like, trust me.
You will save yourself a ton of headache now. But now, let's say you're in a situation where you switch it over to S corp, and maybe the next year is not as profitable, and you go down. Do you still keep it at S corp, or would you switch it back?
I recommend keeping it because, again, I would assume that you should assume your business is going to keep making more money. You know what I'm saying? Right. I think once you make it, just keep whatever you're doing going, and the more money you make, the more money you're going to save.
Beautiful, beautiful, beautiful. So now we're starting to get an even deeper understanding. I'm learning here. This is a masterclass for me, right? Let's go.
Having a podcast is a very good idea.
Oh, beautiful. It's a sensational idea, right? But now let's dive a little bit deeper into tax code. Let's talk about everybody's favorite word when it comes to tax. Even if you don't know nothing about taxes, you know about write-offs, right? So this is probably the biggest reason why a lot of people are going to click on this episode, because everybody's trying to figure out what can I write off? What can I write off? What can I write off, right? But a lot of people don't even really understand the true meaning of what a write-off is, how it works, and how they can leverage it, right, to essentially live tax-free. Legally, right? Legally. Listen, I want to let
first of all, I ain't going to jail for nobody. I'm not losing my CPA license for nobody. So everything that we're going to talk about today
is legal. And if the IRS is watching, I just want y'all to know I love paying taxes. Like sometimes when I'm bored, I just send the IRS money just because, like, yo, hold this. What do I need money for, right? Just in case they listening.
Right.
But let's dive into write-offs, right? Because everybody knows what it is. Everybody's heard of it, but people don't truly understand how they work.
Yeah,
right?
Let's talk about it. So Right, and I remember learning this when I was at work, right? Because just because you're a CPA doesn't mean you know everything about
Facts.
taxes.
Right.
So I'm learning this. It's like, oh, okay, so IRS has a line item that says a write-off or a tax deduction, which are the same thing. A write-off is any expense that's ordinary and necessary to operate your business. Any expense that's both ordinary and necessary to operate your business. So I'm at work, so I'm thinking like, I'm thinking about starting that side business, remember? And I'm like, okay, so if I start my side business, what expenses become deductible that I already have the moment I start the business? So I wrote down a list. I had my budget sheet next to me because I was a budget guy. And I'm like, all right, well, if I start this business, will my phone bill be tax deductible? I'm like, my customers will be calling me on there. It's ordinary and necessary. So I'll get to move my phone bill from a personal expense to a business expense.
Gotcha.
And I'm like, okay, what else? I'm like, internet. I'm like, yeah, I can use that. So now internet. I'm like, all right, what about like my car, right? We'll talk about cars in a second, but I'm like, I can write off, if I use my car for business, I can write off a portion of my car note and a portion of my insurance. And then like Apple Watches are tax deductible because you can check your email. So like I have this list of stuff that the moment, this is why I tell people at home, the moment you start the business, or even if it's a side business, you a lot of like maybe 50 to 60% of your personal expenses immediately become business expenses, which immediately lower your taxes that very same year.
Game changer.
Game changer.
That's
You're not
ridiculous.
spending any extra money.
Right.
The IRS is just paying some of your bills.
Say
Let's
that
sound
again and say it slow, because that's a bar.
That's
Go
a
ahead.
bar. So when you move from employee to business owner, the IRS will start paying your bills because they will be paying a portion of a lot of expenses that you're already at home paying for. So I'm just saying, like, we can spend money, we can do this, but why not let the IRS pay for some things, right? They got the money. Let them pay for it.
Yeah, let them pay for it. Let them pay for it. Come on now. That's huge, right? That's game changer.
Son, you know I pulled you over today?
Because I was doing 90 and a 40 and hit 3 people along the way?
No, I don't care about that. What I do care about, though, is when checking our system, seems like you got a 580 credit score, right? Now, normally, I'd give you a ticket for this, but instead, I'm going to give you a link to a website called francoiscapital.com, right? They specialize in removing hard inquiries, charge-offs, collections, student loans, evictions, and so much more. So when you leave here, head over to francoiscapital.com and book your free credit consultation today, the Capital way. All right? So,
All right, well, thank you, officer. What the hell is this? Are you even a cop?
have a good day.
So now let's dive a little bit into, different ways that we can kind of write things off legally, right? For our business. One of the more popular ones that I'm sure you've seen and a lot of people on social media have seen, the G-Wagon hack, right? The G-Wagon hack. Everybody talking about.
We all made Mercedes-Benz a lot of money.
Yeah. Oh no, 100%.
Yeah.
Yeah, no. Everybody's talking about, and this is one of the main reasons I was excited to kind of bring you on here. Everybody's talking about if you buy a G-Wagon, it weighs 6,000 pounds, and because it weighs 6,000 pounds, you can write it off. This and this, that, and that. Is there any dive a little bit deeper into, I guess, how we can write off our cars if it's possible, and I guess what the specifics are of that whole G-Wagon situation with the tax write-off.
So let's break this into two parts, right? First, I'm going to teach you how to write off cars in general. Then we'll talk about why the G-Wagon deduction is so popular, and it's true.
Okay.
It's true,
Gotcha.
right? I actually, Mercedes-Benz owes me a check for how many people I've walked into that store.
Got to get that affiliate set up.
Right, got to get that affiliate link. So first of all, how do we write off cars as a business owner? So number one, the IRS, so I want you to get the car in your business name if you can.
Okay.
Right? If you talk about business credit, I want you to get the car in your business name if you can, because you're separating the vehicle from your personal name. You're also building your business credit, all those good things. But IRS sake, the IRS does not care whether the car is in your personal name or your business name.
Okay.
I'm going to say that again. The IRS does not care
Very important.
whether the car is in your personal name or your business name. The IRS simply cares, what the IRS cares about is, do you plan to use the car for personal use or do you plan to use the car for business use?
Gotcha.
If you plan to use the car for at least 50% business use, which most people can easily prove, right? Then everything I'm about to say, all these deductions that I'm about to give you are relevant to you.
Gotcha.
Right? So now that you have this car, whether it's in your personal name or your business name, and you plan to use it for business, here's a list of all the expenses that are tax deductible. The interest on your car note is tax deductible.
Boom.
Your car insurance, car washes. Yes. Car washes, details, keep your car clean.
Got you.
Repairs, maintenance, tires, oil changes, parking, tolls, all these expenses related to your car that you're currently paying from your personal account are now business expenses if you can prove that you're using the car for business.
Got you.
Right. And I tell people it's really easy to use your car for business. You can draft the client meetings. Like if I drove here, that would count as business activity. I shoot content in front of my car all the time, which proves that and I run ads in front of my car. So that proves business use. Also, I rent my car out on Turo. So Turo is a car rental platform. So even if you don't have a business, you can turn your car into a business by renting your car out on Turo, and then your car will make you money and it will save you tens of thousands of dollars on taxes.
Okay.
Right? So that's how everybody can write off their car. Easy enough, right?
Easy enough.
Now, there's one thing I left out.
Talk to me.
I gave you a list of all these expenses, but I left the best expense out, and that expense is called depreciation. Right.
Okay.
So for those of you all at home that have ever bought a car, if you buy a brand new car and you hit a U-turn around a lot and try to give it back to them, they'll only give you like 90% of what you just paid for it.
Facts.
Because the car is a depreciating asset. So due to that, the IRS is saying, hey, Marv, you just got this car. We know it's going to depreciate in value, so we're going to give you a tax deduction because the car is going to depreciate in value. Right. So when Donald Trump came into office, he said because they wanted people to buy big cars because the car industry was losing money.
Gotcha.
So they said, hey, if you buy a car that's over 6,000 pounds, which is the G-Wagon, which is the Cadillac Escalade, we'll let you write off the full cost of the vehicle, even if you didn't pay for it.
Got you.
So even if you financed it.
Got you.
Right.
Okay.
So I'll give you a story. Cause, one of my clients just had this last year.
All right.
Had about $150K in net profit in their business. Right.
Okay.
Pretty good year. They were looking at a tax bill of about like $60,000.
Okay.
Again, that it's federal, state, self-employment, and this is $150K in profit. Right. So they're like, okay, Carter, we have this tax bill. We don't know what to do about it. So I'm like, hey, I'm walking them through. And I was like, are you in the market for a new car? They were like, hey, yes, we are. We just had a kid. We want to get the new Tesla Model X. Tesla Model X just happens to be just over 6,000 pounds.
Got you.
Now, the car is about $150K. So what they did, they just went in, put $10,000 down, and they financed the rest. Due to the fact that the car weighs over 6,000 pounds, they get a $150,000 tax deduction the year that they financed the car. So they went from having a $60,000 tax bill to a $0 tax bill.
Got you.
So they save put the $10,000 down. So they save $50,000 in taxes by getting the car they wanted.
That's absolutely insane. Okay. So then, wow.
Wow.
I'm about to throw these headphones. Hey, that is okay. But now, to kind of to clarify, I guess for the prerequisites for the car, it has to be over 6,000 pounds.
So if it's less than 6,000 pounds, you still get to depreciate the car. They just give you a cap per year.
Got you.
So the cap is, if the car is under 6,000 pounds, it's $18K you can deduct for the first year. Okay. $16K for the second year, $9K for the third year, and then $6K every year until the car's value is gone.
Got you.
So this same $150,000 example, it would take you a long time to fully depreciate
because the car just weighs less.
Exactly.
But if it weighed more, then it's like 1, 2, 3.
Exactly. And people don't think you know how much a car weighs.
Okay.
Right. Like when you Google a car, seriously, you'll be surprised.
Right.
First of all, when you Google the vehicle, Google the vehicle's gross weight.
Okay.
So there's two weights when you look up a car. There's the curb weight, which the dealership uses, and then there's the gross weight, which the IRS uses.
That's a bar.
So the Porsche Cayenne is a small car.
Right.
It's over 6,000 pounds because the electric battery is so heavy. You know what I'm saying? So literally Google your favorite cars and Google the car's gross weight, right? And then you'll be surprised at how many cars meet this 6,000 pound requirement. And and this is the last year you can do it.
Really?
So if you haven't moved fast, move on this deduction fast, because after this year, it goes from 100% to 80%. Then it goes down to 60%. Then it go every year until it gets down to 0. So I tell people this with a sense of urgency, right? My mentor tells me this all the time. Success loves speed. Slow feet don't eat, right? So if y'all want to get this deduction, y'all better move fast. I'm serious.
Is there any reason in particular why it's starting to kind of go down after this year, or is it kind of...
Well, so when they put the Trump put this into act in his Tax Cuts and Jobs Act, and he gave them to 2022, and then they can re-sign it to extend it. Gotcha. But we don't know who's in office.
Hey, I'm buying a car today.
Hey,
you understand? Hey, listen, okay, that's great.
And the crazy part is, not to cut you off.
No, you good.
People need to understand this. The client I was talking about, they bought the car in December.
Wow.
You retroactively get the deduction, so you don't have to buy it in. If you get it in December, you still get the write off as if you had the car for the full year.
That's crazy. So now that makes me in me hearing you say this, I don't know if you heard about the story, the Grant Cardone story about how he bought
It's about taxes, bro.
So is that's because but one thing he said was when he bought the jet. So but for those people who don't know, I think Grant Cardone had like a crazy tax bill. I don't remember if he said what the number was, and he was trying to buy something to write it off. He's like,
it was in December too.
Yeah. It was also in December,
Mm-hmm.
but he was like, I'm gonna buy a jet, right? And he was going all over the place, couldn't buy a jet. He wired some company money, ended up getting the jet. But one thing that he said was when he bought the jet, not only did it write off his taxes for that year, it wrote off taxes, I think, for the next year as well. Is that possible?
Yes. Your questions, bro.
Let's go.
Great. First of all, shout out to Grant because he put people on game with that, right?
Right.
Because you had two choices at the end of the year: spend the money or give it to the IRS.
Facts.
What you want to do?
Yeah.
Right. So here's the thing I didn't talk about. Right. Let's say, let's say you had $100,000 net income, but the car you bought was $400,000. Right.
Mm-hmm.
You only can deduct the amount of profit that you have in your business.
Okay.
And whatever you don't get, you get to roll over into future years. Right?
Hold on.
So-
Say that again. Say that again. Say that
Slow
again.
down.
Please.
Slow down.
My heart.
Y'all taking notes?
My chest.
Are y'all taking notes?
My chest. Say it again.
Drop in the comments as you watching, if you're taking your notes.
Please.
You know what I'm saying? 'Cause
Say that again. That's game changer.
game
Go ahead.
changer. It's called the carry forward rule.
Okay.
So the loss carry forward rule. So
Okay.
if you have a loss, let's say, if you have the deduction for the vehicle, let's say you have $100,000 in net profit, but you go buy a G-Wagon. G-Wagons are going for like $350, $400 now because they're going 100 over MSRP.
Okay.
Because everybody is buying them. So if you have $100,000 profit, but you got a $400,000 vehicle and you want to depreciate it, you can only depreciate it down to zero.
Got you.
And then everything else that you don't use, you will carry forward into the future years.
Gotcha.
So a Greg Cardone story, I think he's wired $150 million, I believe.
Some crazy number.
Yeah, so if his business only made $50 million, he got to write off the 50th of this year.
And then the 100 rolls
50
off.
Exactly. So now he's not paying taxes for 4 or 5 years. Set it down. I told you, bro. We not playing. And like y'all, I tell people all the time, if you want to pay less tax, simply change the facts. And it's up to you to change the facts, right? He said, I'm not, all right, bet. I'm about to, his tax bill probably like $30 million. He's like, nope, I'm a finance this jet or whatever, get business credit, whatever. Now I don't pay taxes for 3-4 years.
Crazy. And like you said, it don't got to be a jet. It could be a car.
It could be a car. It could be a any type of equipment, right? You know what I'm saying? It could be a RV if you want to just travel in your RV. Like, you got options.
Crazy.
You got options.
So now another question I would have is, does this also apply to real estate? Because real estate, the value of the property goes up, it goes down depending on the market and stuff like that. Is there a way for that to kind of also play into, there may be a real estate investor watching this, right? Is there a way for them to now use that asset that they've purchased, this investment property, and use it as a tax write-off for themselves as well?
Absolutely. So real estate is the most tax advantage asset you will ever have.
Okay.
It's like taxes on steroids.
Okay.
So there's this concept that I call earn in pocket, lose on paper.
Okay.
Earn in pocket, lose on paper. And all that means is that real estate is one of the few assets where you can earn money in real life, like physical cash in your pocket, but you lose money on your tax return. So you don't pay taxes on the money that you earn.
Gotcha.
Because, so I'll give you an example of my property, right? I have a $500,000 property in Chicago.
Okay.
The net profit on that property is about $1,500 a month. So $18,000 a year. I'm making $18,000 cash money in my bank account. But my taxes say something different, because just like you can depreciate a car, you can depreciate a real estate property. Okay? So my property costs $500,000.
Okay.
And now when real estate, you have to, if you want to find out how much your depreciation deduction is, you take the amount, the amount that you pay for the property divided by 27.5.
Say that again.
You take the value of your property,
Boom,
and divide it by 27.5. So let's do this together.
Let's go.
$500,000
Hold on. Give me a second. Let me find 500K.
divided by 27.5.
27.5.
How much is that?
18,181.8182.
So 18,181.
Basically,
How much was my profit from the property?
18,000. So you could write the. It's a different game being played out here,
It's
man.
a
That's
different
crazy.
game being played out here.
So basically, you're able to write all of it off. Just
All
like
in all.
that.
So like that. So my property is losing money on paper.
Right.
Right. And I get to take those losses against my ordinary income other
Right.
places. But I'm actually keeping cash money in my bank account from this real estate property.
Wow.
Not to mention, as the value, I might say that for the next. I don't know, man. Like,
it's up to you. We here. We here. You know what I'm saying?
Not to mention, as the value. So now my property is worth $650,000.
Got you.
I bought it for $500,000 2 years ago. If I wanted some money, let's say I had a crazy investment, I could a purchase I wanted to make. I can go borrow $100,000 of equity on my property.
Right.
And I don't pay taxes on that money. I can use that money to invest in another property.
So you could refinance the mortgage, take the equity out the crib, but you don't have to pay taxes.
Because loans are not taxable to the IRS. So now I'm getting tax-free money from my asset that I'm not even paying taxes on in the first place. I'm making tax-free cash flow from the asset.
Okay. And
I can go borrow tax-free money against the asset to go buy other assets that I won't pay taxes on.
Oh, real estate is ridiculous.
It's ridiculous.
Of all the different fields and this is the number one
for tax event. We can do a whole another episode on real estate investing. Bro. We just scratched the surface on that.
I'm getting goosebumps, ladies and gentlemen. This is wow,
yeah,
wow, 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 wow. I mean, damn.
See, aren't taxes fun? That's why I tell people like taxes. People get so people how do you talk about taxes all the time? Or people I don't want to learn about it. It's fun when you know how to work it.
100%.
Right?
Yeah.
I'm teaching. When I tell people they can live tax free, because one of my quotes is tax free living. They're like, can I really live tax free? I'm like, absolutely. If you decide to get the information on how to do that, because information changes situations.
But not without implementation.
Not without implementation.
Come on, man. Come on. We here. Okay, no, let's keep it going. No, we got to keep this because people may be watching this now like, okay, that's probably all the different ways that you could write taxes off. We haven't even scratched the surface
Bro.
yet. Oh, it's a different game being played.
It's a different game.
Can we keep going? Is it all right with you?
It's more than okay with me.
Let's talk about this is a very big one, especially for guys like yourself and myself. Let's talk about travel, right? Because as entrepreneurs, as we're building our businesses, we're going from state to state, city to city. We're networking. We're going to these conventions. We're meeting people. We're building our.
We
brand.
met at a convention. At a convention.
Right. So networking and doing all these different things to kind of just take ourselves to the next level. Travel is also another big one, right? People are flying from coast to coast each and every single week, each and every single month, and don't even know that that's another way that they can, leverage the tax code to get some write-offs. Could you talk a little bit about the game, about how we can turn some of these trips that we're planning into write-offs for our business as well?
Yeah. So your boy travels.
Yeah, a lot.
Like your boy travels.
Yeah.
Right. And I always tell my mentees and some of my students, I ask them, do you like to travel? Like, yeah, I love to travel. I say, you want to know what's better than traveling? They're like, what? Traveling and getting the IRS to pay for the trip, right? Tax-free travel is what we're talking about, right?
That's a fact.
So I'm gonna give you all a play on how to get the IRS to pay for all your trips, right? How to write off all your trips.
Okay.
So this concept is called wrapping a weekend.
Okay.
Wrapping a weekend. Everybody take notes.
Wrapping a
weekend.
Okay.
Right? And this is how you can turn any personal trip into a business trip by following these steps, right? So let's say I'm like, hey, Marv, we come to Miami. We kicking it for my birthday. Let's go turn up. You like, all right, cool. I'm like, bro, we come in, we getting there on Friday, we leaving on Sunday. That's a personal trip, right? No doubt about it. We going to kick it for my birthday. But you smart. You're like, hey man, look, instead of coming in on Friday and leave on Sunday, I'm gonna come on Friday and I'm gonna leave on Monday.
Okay.
Right? And doing that, I want you to find business activity on Friday in Miami, and I want you to find some business activity in Miami on Monday.
Okay.
Right? And people always get confused, like, well, what's business activity? Business activity is very simple. It could be taking a customer out to lunch, if you have clients out there, taking a business partner out to dinner. We've done business together, so us going to dinner is business activity. It could be going to a conference, like we were in Vegas at a conference, or it could be, and everybody write this down, if you don't have customers, if you don't have a conference, go to eventbrite.com.
Okay.
Eventbrite.com. And you can find a networking event in your industry in any city on Eventbrite. Right. Go there, shake hands, kiss babies, get your badge as proof of as evidence of being at the event. Stay for an hour. Right. That you do that on Friday, you do that on Monday. The IRS now deems the whole trip to be a business trip. Okay. So it don't matter what you do over the weekend. You can sip Mai Tais on the beach. You can now write off your flights, 100% of the flight costs, 100% of the meals, and 100% of your lodging, your Airbnb or your hotel.
Crazy. So wait, no, but watch this now, right? We're here. Today is a Monday. You came to New York. We're here. We're shooting this podcast. This podcast is for my business and it's for your business. So
absolutely,
by your definition, this
counts as business activity.
Oh, so that means you could write off this trip.
You think I'm not?
Come on, man. I'm just asking
Come on,
a question.
first class on the way back home.
I'm
King.
just come on. Come on.
I ain't taking a 6-hour flight, not taking first class.
Yeah, no,
back
no.
there.
That'd be insanity. That'd be insanity. But no, so okay, wow.
Wow.
Okay, wow. So now my question is, let's just to kind of break it down a little bit more. You said you would come in on a Friday, you would leave on a Monday. Does it have to be that exact span of time, or do you do it in that way just to ensure that you're able to go to 2 different business activities?
Well, so I do it. I teach people that way because most people are trying to go out of town on the weekends and kick it. And this is a strategy that you can use where you can, like, you don't have to work on Saturday and Sunday.
Okay.
You know, to write off the whole trip.
Mm-hmm.
You know what I'm saying? So I teach people this strategy so that they can do whatever they want on the weekend, but still write off their entire trip. Now, if you decide to go somewhere for 2 weeks and you could do business activity every day, you can write off every single day.
Gotcha.
Right? I just don't want people to have to feel obligated to find business activity on the weekend.
Mm-hmm.
But like when I'm traveling out the country, and I'll give you another play on this.
Let's go.
So we go into it?
Let's do it.
Okay,
I mean, we here.
We here now, right? Y'all getting all the sauce.
Let's go.
Hey, look,
and this is just the first one,
Thank y'all
man.
host. Thank y'all host.
Let's go. Let's do it.
So this is a play.
Come on. Let's go.
Okay. I call this the B-Day, the B-Day play, right? So that one I gave you, that's cool, right? But I'm an international guy.
Okay.
I take a 1 month trip out the country every 3 months.
Really?
July, I'll be in Europe all July.
Goodness, where in New York, if you don't mind me asking?
I'm starting in London, then Barcelona. Then,
This man said starting in
yeah,
London.
because I don't know where I'm going. I just pick the places. We'll talk about it.
We'll talk about it after. Go.
So let's say, you want to have your birthday out the country for, 5 days or whatever.
Got you.
Right? First of all, you need to have entrepreneur friends. If you're an entrepreneur without entrepreneur friends, you're doing yourself a disservice because if you're an entrepreneur hanging out with employees, you go be the employee again before you know it.
Yeah, well, there you go.
Right.
That's a gem. That's a fact.
Went over a lot of people's head, but like, hey, look, who you hang around is going to be who you become. Right?
There you go.
So, you can go out the country, say you're going to go to Brazil for 5 days.
Mm-hmm.
That's a personal trip. Or you can have your birthday be a mastermind, right? Which now you're inviting your 5 business partners out the country.
Mm-hmm.
You pick, y'all having a 2-hour mastermind each day. Each person's teaching a new subject.
Mm-hmm.
You document the meeting, you document the attendance, you document the mastermind. And now that is that's not a 5-day birthday trip. That's a 5-day mastermind out the country. And you're not going to write off that entire trip, the lodging. My Airbnb was like, I did this in Colombia. Yeah, and we wrote off the Airbnb, we wrote off the food, and wrote off our flights, and we documented the mastermind. We made a lot of money from that event because we were giving some game to each other. Right. But we also have fun.
And that's another play right there.
Play.
So you're basically leveraging your birthday trip and turning it into a business trip
by calling it a mastermind and doing we did 2 hours a day a session, and then the rest of the day was
writing that thing off.
So
now, that's interesting because I've seen some of my entrepreneur friends. What they'll do is when they go travel to like different cities or out the country, they'll like go on IG Live for like an hour and then just give game.
Because then I make money off IG Live.
Right.
That's proof. So when the IRS is asking, is this legit business activity? The question that they're asking is, does it have a chance of bringing in the business revenue?
Got you.
Every time I go live, I make money.
Mm-hmm.
So if I go live and I make money from that place, then that counts as work.
And that would now make it a business trip, which now you can use as a, come on now. Let's go.
Wow, people giving away 50% of their money when they don't have to.
Come on. I think, it's funny. Actually, I've heard you, and you can speak a little bit more about this. You actually made because this references everything you just said. I've heard you say on another interview, something about it's okay to pay the IRS, but don't leave a tip.
Yeah. So one of my favorite quotes is that, it's okay. We, as a CPA, right, we all should pay the IRS what we legally owe them.
Facts.
But let's not leave a tip.
Facts. There you go.
Right. The average person overpays taxes from $10,000 to $20,000. The average person, meaning that they paying more than they have to. And let me tell you something. The IRS will never call you and say, hey, you gave us too much money. Let's get some of this money back. Right. So my thing is like, let's not leave a tip. People tipping the IRS 5 figures, but don't tip their bartenders or their waitresses. I don't understand.
Crazy. Okay, so now let's come back full circle to write-offs, right? Because you just gave a lot of different game and a lot of different plays on how we can take things that we're probably already doing and leverage them to be able to live tax-free legally, right? But now, one thing I've heard, going back to when I was kind of window shopping for CPAs, the CPA that I have now, one thing they told me as it pertained to writing off was like, you want to kind of tread a very thin line. You're treading a very thin line because, or you're going to be treading a very thin line because you don't want to write off everything to the point where, you don't look lendable to banks or things of that nature, right? So could you talk a little bit more about that? Is there like a line that you don't want to cross when it comes to writing off? I mean, playing the tax write-off game, or is it like, nah, man, go crazy?
Yeah, so this is a great question, bro. You got some good questions.
I appreciate it, man.
Hey,
I
look,
try.
Hey, your boy comes prepared.
Hey.
If y'all think that he winging this, he don't
No,
wing
no,
anything.
no. Come on, man.
All right, so
Let's go.
there's two ways to overcome this, right? People ask the question all the time, like, if I write off everything, I want to buy a house, I want to buy a car,
Yeah.
how can I get loans if I don't have any income? So there's two ways to fix this. Number one, there are a lot of lenders now that understand the way entrepreneurs operate. There are more entrepreneurs created in the last 2 years than the last 10. Right. So there are lenders that say, okay, we understand that entrepreneurs are going to have low net income because they're writing everything off. So instead of looking at 2 years of tax returns to give them funding, we'll instead get 6 months of their business bank statements. Right. And as long as you can prove that you're making 3 to 5 times of the rent or mortgage, we'll, as far as income in your business bank account, we'll approve you for the loan because we understand how business owners operate. The problem with that is if you go to those loan companies that specialize with entrepreneurs, they do charge you a higher interest rate because you're more risky.
Right. 100%.
Right. Or you can do it this way.
Talk to them. Let me sit
You
up.
ready?
Let me
You're
sit
set
up.
up
Let
for
me
this.
sit up. Let me sit
Set
up.
up
Let me
for
sit
this,
up. Be
'cause
careful. I will slap this microphone down. Be careful with what you about to say next.
Okay.
I will tear some stuff up in the studio. Go ahead. Go.
Let's get into it. And I only gave this away for free one other time.
Let's
been
go.
On this.
Let's go.
So look.
Let's
all
go.
right.
Pen, paper,
Pen,
notes.
paper, notes.
All
Let's
right.
get it.
Focus.
So you're like, all right, Carter, it's the end of the year. I want to write everything off, but I want to buy a home next year and I want to buy a car next year. And I know if I write everything off, I ain't going to be able to get the loan. So I'm like, all right, cool. Here's what we're going to do. We're not really going to write anything off. We're going to show a lot of income this year. And you're going to have to pay taxes. So we're going to show $100,000. You might have to pay $20,000 in taxes, whatever, right? Then after, you pay your tax bill, I want you to go ahead and get your property, go ahead and get your car. Got your property, got your car, got a great interest rate, cool. Now let's have some fun. Now what we going to do, we'll go file an amended tax return and recapture all of those deductions that we didn't take. So now we go add those, the car, the clothes, all the stuff that you can write off. Now we go add it back, file an amended tax return, get all that money back that you just gave to the IRS. Because we could file an amended tax return up to 3 years after we file. Right? So you pay the taxes, you get your loans, you file an amended return, you get that $20,000 right back in your pocket.
I'd break this microphone if I could, brother. That's insane.
Yeah, so there's no rules about you can't go back and refile, right? Because a lot of people after hearing this episode are gonna realize how much money they left on the table last year,
and they're gonna go back and do the amended tax return.
Exactly.
Gotcha.
So we're just doing this proactively. We'll get that property and get that car, get everything January, February, March, whatever. And then we go file an amended return, get all your money back, and then we just beat the system.
Easy peasy, lemon squeezy.
You already know.
Love it. Goodness gracious. Goodness gracious. Okay. This is let me sit up. This is some stuff, man. This is
hey, look, I know my stuff, man.
Yo, and what's crazy is, like I said, credit is great, but I've always known, I mean, we all know, like, when it comes to taxes, like I said in the beginning of the episode, like, this is some game changing stuff that if you are an entrepreneur or a business owner and you're not, making yourself privy to these things, you're going to leave a ridiculous amount of money on the table.
You know what our next episode going to be about?
Talk about
how
it.
business credit can help you live tax free.
Okay.
I got some special strategies
Hold
on
on.
how business credit.
Hold on.
Bro, I got to play. I'm going to save it. Bro, I got to play that's going to blow your mind.
Let's go.
Okay, so now we know what our next episode going to be
This
about.
is going to be crazy. This is
Okay.
going to be crazy.
Okay,
So,
cool.
but now let's dive a little bit more into it, right? And you for this next question, you as a CPA is definitely going to be able to appreciate this because you probably dealt with this a lot. When we talk about, becoming tax savvy and learning how to live tax free, a big part of that is planning, which I feel like not enough people do a good enough job of, right? You as a CPA, you probably know if, tax time is April, people wait until March. Now they're categorizing their transactions. Now they're making all the phone calls. Now, I already know that for the CPA I deal with, once March and April come, I can't even reach her.
Like
because
calling a CPA during April, like March and April, that's so disrespectful.
yeah, it's
It's disrespectful to yourself and
Yep.
disrespectful to the person.
Yeah. It is. It's like hell week for y'all, man. It's bad. It's really, really bad, right? But a big reason for that is because a lot of entrepreneurs don't do their due diligence in terms of planning the right way so that, once tax time comes, they chilling. Their feet is kicked up because they already did the dirty work beforehand, right? Talk a little bit about, if I'm an entrepreneur, right, and I'm tapped into this, I'm like, okay, I got the game. I'm learning how to live tax free. Right now, at the time of this recording, we're in June. So now from here all the way to the end of the year, this is when we should be putting things together. This is when we should kind of be making sure we have the right systems, the right softwares, right everything in place so that this same time next year, we're not giving our CPA no headaches. What does that look like? How do we plan? How do we prepare? What are some different things that we can do to make life easier for us and our tax preparer come tax season next year?
Absolutely, man. So I tell people all the time, there's 2 tax seasons, right?
Oh, okay.
And most people think it's one. Most people think tax season is January through April. Boo bop, I'm good, right?
Mm-hmm.
But no, there's tax paying season, and then there's tax saving season.
Right.
Right. Tax paying season is January through April. Like once the previous year closes, we can't go back in time and go fix things that you missed.
Facts.
Right. So during January, April, all we doing is telling you how much you owe. You got to pay that. Right. Tax planning season is I like to call it like the last 6 months of the year. So from June to December. Right. So now we're in this place of, all right, not only do you have to get your stuff organized because you can't write off what you don't track.
That's
right.
That's facts.
Right. So, but now we're also planning to see which strategies work for you. Right. Do you have kids? Right. Do your kids work in your business? Why not? Do you know you can pay each of your kids up to $13,000 a year, and they don't pay taxes on that money, and you get a write off. Right. So we're talking about these different strategies based on who you are and what your business look like, and so. If we do this planning June, July, August, September, December, the rest of the months, by the time December comes, not only are you going to be good, you're going to know exactly how much taxes you're going to owe. Right. The people I work with, we don't got to have a conversation in January, February. They already know based on the planning we've been doing how much they're going to owe the next year. So they're kicking back and chilling. So the smart people meet with their CPA proactively before the end of the year when they have the time to talk with them. And then that way during the hell week, they don't have to bother.
Good, got you. Software wise, do we need QuickBooks?
Yes, you do.
It's a must.
Yeah, it's a must. And I don't have an affiliate link with QuickBooks yet, but the
they might have sent. They need to send.
They need to send me one, man. But QuickBooks they're just the dominant when it comes to the business tracker for everybody. Another good one is for tracking your business miles for your vehicle. Mileage IQ is really good. When you get in your car, you say business and then it tracks your miles. So those are 2 softwares I think everybody needs.
So you got to have QuickBooks. You got to have Mileage IQ. Is there any other softwares that you're aware, or those are just the 2 main ones you're like, now you good if you got these? Or any other resources you would recommend for people to tap into where like, yo, if you got this, you should be fine come tax season?
Yeah, I think it's we'll talk about opportunity for people to tap in, but I think it's just educating yourself, right? Like don't just hire a CPA blindly and expect them to know everything, because I tell people all the time, when you hire a CPA, you gotta make sure one very important thing: do they work for you or do they work for the IRS?
Say that again, Miss. Say it slow.
Yeah, gotcha. When you hire when you hire a CPA for your business, you have to ask the question: do they work for you or do they work for the IRS?
What's the difference?
So a CPA that works for the IRS is just going to tell you how much you can't do. Oh no, you can't write that off. Oh no, you can't do that. That's a bad idea, because they're lazy and they don't want to do the research to understand if you can do it or not, and they don't really just want to file your paperwork, to be honest, right? A CPA that works for you wants to save you as much money as possible, so they're proactively implementing strategies so that they can save you money. And I tell people all the time, like, your CPA should work for you for free. Like my mentees, I work for them for free. What I mean by that is that I will never cost them more money than I save them.
Facts.
If your CPA charge you 10 grand, but they save you 50, you good.
You won.
Right. So your CPA should essentially be working for free. And it's an investment, not a cost.
Quick question. Would you be interested in learning how to start a 6-figure credit repair company? Yes? Okay, what about a 6-figure funding business? Yes again? Okay, what about a 6-figure trade line business as well? 3 yeses, cool, that's all I need. Now listen, I can't say too much now because I do need to get you back to this interview, but I'm getting ready to launch a mentorship program, and quite honestly, I think you'd be a perfect fit, right? So when you're done with this video, click the link in the description. It's gonna bring you to the landing page. It's gonna give you all the information you need about this program, when it starts, what it's about, everything you're gonna learn, and if you would be a good fit for it. We'll talk more on that page, but for now, let's get you back to the video.
You were also just talking now about also educating yourself, and once again, this whole thing is just about becoming more tax knowledgeable. Why is it that we see, and I'm sure you see it so much times, you see celebrities come out and they're like, yo, my CPA stole this from me, or I ended up, they thought that their CPA was paying and they were sending them checks to pay their taxes. And next thing you know, they look up, they owe like 10 million, 20 million, 30 million. This, I would assume, happens more often than we're probably made knowledgeable to. Is there any reason in particular? Is it just their lack of due diligence? Are they just very careless, very lazy? Is it because they're not educating themselves?
Yeah, a lot of people hire their friends and family, which is like a mistake.
Uncle Rodney.
Uncle Rodney that says he does taxes.
Tutu and them. Yeah.
And that's good. And I tell people all the time, like, look, experts are expensive. Like I'm very expensive to work with,
Right.
but amateurs will cost you a fortune.
Ooh, say that again, but say it slow. Say that again, but say it
Got
slow.
you. Experts are expensive, but amateurs will cost you a fortune.
I'm getting goosebumps.
So people need to like don't be stingy when it comes to like something as important as this, right? Because again, it doesn't matter how much somebody charge you. If they're saving you more money, then it's still okay, right? But I think that's a big problem why people end up owing and like just not knowing what's happening.
Got you.
Because they blindly trust their family, like and that's not okay.
Man, this might be my favorite episode, brother.
Hey, look, and I told you, man, like coming in, I was not playing.
No, you wasn't playing. Yeah, you wasn't playing. And we're not. And this is just part one of the series. That's what's even crazy. Like we're definitely gonna have to run it back. One thing I wanted to talk about, of course, I know we have to get you out of here. I know you have a challenge coming up.
Yeah.
And there's a lot of people that's watched this entire sit down. They're like, I got to tap in with this dude. I need to learn more. They're hungry for more knowledge as it pertains to tax. And I think you knew that coming into this, and you were like, all right, I'm gonna put together this challenge. Talk a little bit about the challenge you have coming up, what it consists of, how people can tap in, and just the whole breakdown from top to bottom.
Yeah, man. And the reason I did this is because so here's the thing, like coming into my career, I'm still from the South Side of Chicago, and I understand poverty, and I understand a lack of information, right? And I'm expensive to work with one-on-one. Like my one-on-one fee last time I did it was $60,000 a year, right? I think that's cheap because I'm saving people a lot of money. But here's what I'm saying: just because somebody can't afford to work with me at that price point doesn't mean that they don't deserve the information.
You said 60,000?
60,000.
One-on-one.
Well, yeah, one-on-one. But if I save you 100, then what are we talking about?
Yeah, you win. I'm gonna cry, but I won.
Yeah, exactly,
I know I won. But sorry, go ahead.
But the reason I say that is because I understand that just because somebody can't afford that type of price point,
right,
doesn't mean that they don't deserve the information.
Right.
So I was thinking, how can I really pour into everybody who really deserves to learn this information? So I came up with this 5-day training. And it's virtual, but I was like, all right, I'm a train people as if they're my millionaire clients. I'm gonna give them all the game, all the sauce, all the tax-free living strategies that they can implement into their lives, and they won't have to pay me anywhere near as much as my clients pay me one-on-one. So when I was coming up with the event, I was like, all right, 5 days, $1,000. I thought was reasonable. My mentor was like, if you really want to touch people, it has to be cheaper than that.
Okay.
And I was like, oh, cheaper than that? So what I did, for any of y'all watching, right? Any of y'all watching that want to be a part of this amazing experience, it's going to be 5 days for just $297.
Oh, that's nothing.
Bro,
that's water.
That's $40 a day.
Yeah.
I never show up $40 a day.
Yeah. That's crazy. And this is going to be you. Is it anybody else part of it, or just you straight up?
Yeah, so it's going to be me. I'll bring in special guests.
Okay, got you.
I bring in special guests, but it's me, and they get 2 hours a day. They get an hour of teaching and then an hour of Q&A.
Gotcha.
So they get to ask me their personal questions.
This is like a pseudo one-on-one in and of itself.
Exactly.
Gotcha.
And that's why I'm doing one time. So look, y'all want to talk to me for $40 a day, I'm gonna do this one time. Right. But it's so I'm gonna do this. I really want to pour back into the people, and we're entering into tax planning time. So I did this strategically so that I can really help people during the most important time, which is this tax planning time. My goal in this event is to help everybody save a minimum of $50,000 in taxes.
Gotcha.
Minimum.
So they're paying $297 to save a minimum of $50,000. They're getting you for one-on-one time, right, to ask their questions, which would be another $60,000. So this is basically a damn near a 6-figure offer that you're putting into $297, $40 a day. You basically giving it away for free. I hope you know that.
I might change the.
No, I'm not. I'm not trying to. No, we good.
But this is
crazy though.
This is crazy. I'm looking forward to it because I'm gonna be able to work with people who normally wouldn't get the access to me. Right. I'm gonna get to see the people who I normally wouldn't be able to work with. But again, I didn't go get this information from the multimillionaires and all these, for lack of better words, these white rooms that I had to spend 10 years in to get the information that I got. I didn't get all that not to give it to my people.
Facts.
That's just a fact. So I believe that the secret to living is giving, and I want to give back as much knowledge as possible so they don't have to, how hard it is getting in these rooms, how expensive it is getting in these rooms.
Amen.
You know what I'm saying? So I did that. So hopefully y'all won't have to go through that. You know what I'm saying? So I'm just really excited about this opportunity, man. And I'm gonna go in.
Let's go.
If we were here for less than an hour.
Yeah.
If this was good, imagine you're gonna spend 10 hours with me.
Right.
Over 5 days, and it's virtual. So if you don't got to pull up nowhere, all you got to do is be in front of your computer, and get the game, man. And I'm super excited about it.
This is an amazing opportunity, man, and I appreciate you for. And it goes. Is it gonna? The challenge is what? Is it next week or?
No, it's a few weeks. It's a few weeks out. So by the time this episode airs,
it'll be like right around the corner.
Yeah, it'll be about maybe like a week or two out, and then so that'll get everybody plenty of time to register and join.
Beautiful.
And sign up. And yeah, man, it's gonna be crazy.
Let's go. Let's do it. So now my final question to you before we start to close this thing out. Answer this question. Well, fill in the blank for me, right? As it pertains to the challenge that you're about to do, you should not join this challenge. You should not partake in this challenge if blank.
You should not partake in this challenge if you enjoy working for free for 6 months out the year. You should not join this challenge.
Okay.
I mean, it's cool. Like some people like free labor. If that's for you, do your thing, king. Do your thing, queen. But if you would rather not work 6 months out the year for free, then I advise you to join this tax-free living challenge where I'm going to break down the game over 5 days so that this year, and the dopest thing about information is that once you get it, nobody can take it away from you.
That's a bar.
So once you learn that this year, you can apply it to every year of your life. And we haven't even talked about how to write off your clothes, how to write off your rent, how to write off travel. We talked about travel, but how to pay your kids tax-free. We haven't talked about tax-free crypto. There's so many layers that we haven't even hit yet.
We got to do like
there's over 300 write-offs that you can take in your business that we haven't even hit on. So we're going to talk about that, all about that in the challenge, and people will be able to really tap in and get more information with me. Let's
do it, man. And also, where can the people find you as well?
Oh, yeah. So on Instagram, Twitter, TikTok, all platforms, Cofield_advisor on all platforms. They can tap in that way. I give a lot of game out on my social media platforms, but I gave a lot of game out here.
Yeah, this was ridiculous.
So
I took some mental notes. I'm about to go home. I might go buy a car today.
Hey, look.
You can
use the business credit to get it, so you ain't using your own money.
Come on,
stop it.
Man.
This next episode.
This next episode is gonna be ridiculous. Yeah. But no, in all sincerity, my brother, thank you, of course, for stopping by and adding value to my community. And thank you to each and every single one of y'all for tapping in. If you haven't already, tap in with my brother on his 5-day challenge. It's gonna be absolutely ridiculous. And of course, follow him as well, and like and subscribe to the channel for more content coming forward.
What this man just gave y'all
for free,
for free. This will cost
this
will cost a lot of money. He just looked out for y'all, so please,
come on, man.
Like, subscribe, share this episode.
Yes, sir.
Because you got some crazy stuff coming up, bro.
Oh no, this summer is gonna be a beautiful one, to say the least. this year,
I feel like I'm gonna be back in New York a lot. With my other friends.
I mean, you might as well just get a crib out here. Yeah, we're gonna be feeling a lot of. It's gonna be some game. But no seriousness, man. Thank you for stopping by. Thank you for everybody for tapping in. And as always, I'm Marvin Francois, my guy Carter Cofield. Y'all have been good. I've been great. This has been amazing. Thank you, and God bless. Peace.